This year, I averaged between $30,000 and $50,000 a month day trading options, and over 25 of my students went full-time just this year with day trading. In this video, I'm handing you the full roadmap so you could follow the process and not anyone's trades. One repeatable playbook, a simple rule set, and a 6-month path you can actually follow. You'll leave with a beginner-ready plan, the confirmation checklist I teach, and the step-by-step path to trade with calm consistency. First, let's talk about why you're stuck and why it's not your fault. Now, you're already probably doing all of the things that you think you're supposed to do. You wake up early, you watch the market, maybe you even binge watch YouTube videos, or jump into a Discord to search for signals. But the second that opening bell rings, your mind goes blank. Do I get in now? What if I'm missing something? What if I'm wrong? So you freeze, or you chase, or you copy someone else's alert without really knowing why. And at the end of the day, you're drained. Not because you didn't work hard, but because you didn't have a clear path to follow. That's not your fault, because no one taught you the sequence of what to do. Most people just throw random strategies at you and leave you to figure it out. The truth is, you don't need more information. You need structure. You need a process that tells you what to do first, what to do next, and what to ignore or avoid. And you need a way to get feedback when you slip, so you don't keep repeating the same mistakes. That's what creates confidence. And when you have confidence, you can finally start focusing on your trading plan instead of fighting yourself, your own thoughts, or your emotions. Let me show you what this actually looks like when it's working. You sit down, open your platform, and instead of staring at a bunch of candles wondering what to do, you already have a written plan. You know exactly what qualifies as a trade and what doesn't. And since you know exactly what you're looking for, when the setup comes, you don't hesitate. And you don't take any trades that don't meet all of your criteria. You wait for your confirmations, you click once, and that's it. Your winners feel good because they followed the plan. And your losses, they're small and they're controlled. And your risk was defined before you ever entered the trade. No panic exits, no blowing up accounts. You close the laptop feeling calm, like you actually executed, not like the market just ran you over. That's not luck. That's what happens when you have a repeatable process. And that's exactly what I want to walk you through in this video. Alright, so let's actually build out your 6-month roadmap step by step. The first month is all about removing your initial confusion. Most people never even make it past this stage because the trading platform itself feels overwhelming to them. So here's exactly where you start. Open a brokerage account. If you're inside of the United States, Think or Swim by Charles Schwab is my absolute favorite platform. If you're international, Interactive Brokers is also a good option. Fund your account with whatever makes sense to you. You can start with as little as $500 to $1,000. It doesn't have to be huge. The point now is to get practice. At this stage, you need to learn how to use the active trader on your platform so you can enter quickly without fumbling around, and so you can also manage your risk. And you need to know how to place a stop loss and place a target order. Now here's a mindset shift I want you to make. Candlesticks aren't just shapes or patterns on the screen. They tell a deeper story. Candlesticks literally show you if buyers or sellers are in control, and they give you early signals when the momentum is shifting. Learn to see candlesticks as buyers and sellers leaving a footprint on the chart. By the end of your first month, getting started with trading, the goal is not to already be profitable. If that's your goal, you're rushing the process, especially if you're a complete beginner. In your first month, the goal is to be comfortable with your trading platform, to open your platform without anxiety, to write down a simple plan and be able to place an order following that plan. And you don't just want to know how to buy markets, You also need to know how to place a stop loss limit order with your target order as well, so you can manage your risk and take profit. If you can do this without sweating, that's a huge first win in your first month. Month 2, you need to learn supply and demand. The backbone of my entire trading is supply and demand. Forget random indicators and forget chasing whatever Twitter or Discord is talking about. Trading is simply watching where the biggest orders in the market are sitting and how price reacts to them. Here's what to practice. Learn to mark valid supply and demand zones. Not every line or box that you draw on your chart is meaningful. Look for areas where there was a consolidation period and then an impulsive breakout from that consolidation. Especially if that's paired up with a swing high or swing low, that's gonna be your strong area of supply or demand. Delete weak zones and delete support and resistance lines that the market is not actually respecting. Your chart should look calm and clear, not like a Christmas tree all lit up. What I do after I identify my supply demand zones, those become my levels of interest, and I create my trading plan surrounding those levels that I'm interested in. My plan includes an if-then statement. If price tests this level, then I'll target this next level. My plan also includes exactly which confirmation I'm looking for that will make me click the buy trigger. If I don't receive all of the confirmation in my checklist, I sit on my hands and I don't enter the trade. If I do see all of my confirmations on my checklist, I enter without hesitation. This is how you stop reacting and start preparing. By the end of month 2, your win is being able to pre-plan every single trade you take. You should be able to say, here's my bias, here's my levels, here's what makes me enter, and here's what makes me stand down. One of my students, Oliver, used to think more trades meant more progress. We slowed him down, fewer setups with more planning. He grew his $1,000 account to $60,000 in less than 3 months. Not because he forced it, but because he stopped cluttering his chart and trusted his levels. Month 3 is execution foundations. This is where planning becomes action. We build what I call a confirmation checklist. No more it looks good, no more gut trades. Your entry either checks the boxes or it doesn't. Period. A simple checklist would look like this. First, market structure shifts in your direction on the lower time frame. Second, volume confirms the move. Third, the 9 EMA behavior supports your trend. You know exactly what you're looking for. And if it didn't check all these boxes, you would know not to enter that trade. Before you enter the trade though, you should also know a clear invalidation point and where you're going to stop out. Your trade should offer at least a 1-to-3 risk-reward ratio. If all of that lines up, you take the trade. If not, you wait. This is also where you introduce option contracts the right way. Forget buying random strike prices. Pick them based on your hold time and your risk. You must know what the delta does in your option contract and what it means for the movement you're looking for, and know how theta eats your premium if you're holding too long. By the end of this month, you already should have been able to take a couple trades and journal them with details and screenshots so you could analyze later and continuously improve. It doesn't matter if it was a winning trade or a losing trade. What matters is that you followed the checklist and you learned something from each trade. Month 4, you should learn institutional confirmation. Once you're comfortable with setups, it's time to add a filter. This is where tools like Level 2, Time and Sales, or even Bookmap come into play. They can help you see if there's actually real size backing up your trade idea. If you're looking at a demand zone, you can actually see if buyers are stepping in. It's a very powerful confirmation. If size is faking or liquidity is stacked on the opposite side of your trade idea, then you could pass the trade. But don't overcomplicate it. You don't need to master every single tool to be a profitable trader. You're simply adding an extra layer that says, yes, there's real interest here, or no, it's a trap. Your goal by the end of this month is restraint. Try to take one A+ quality trade that you pre-plan and skip one setup that you normally would have forced. That's huge growth. Knowing what not to touch is a bigger milestone than any win. When my student Michael joined my mentorship program, he had 2 years of trading experience. And when we started to review his trading journal, we noticed at first he was taking a lot of B- and C- setups. But once I taught him my 2-step trading process, plus my confirmation checklist, he completely stopped taking low quality setups, and every single trade he took from then was A+. He stuck to one checklist and one watch list, which means some days he didn't even take trades.
A pretty good one this morning, and then just kind of chilling for the rest of the day right now.
It was boring, but boring turned his $1,000 account to $20,000 in just 4 months. Month 5 is all about getting in practice and stress testing your strategy. If you are a complete beginner, I recommend to start practicing on a simulation account. That could be paper trading, or that could be back testing. On Thinkorswim, there's this tool called On Demand, and you could paper trade trades from the past. So even if you're not available when the market is open, you can still get in practice after the market closes. Use paper trading or on demand to really push and test your rules. You're not trying to be perfect. You're trying to see how your system holds up across different market conditions. So you're going to be focusing on your entry discipline. And at the same time, you also want to focus on your exit management. I recommend to create one exit strategy and follow that for all of your trades. Maybe that would mean taking partials at a 1-to-2 risk-reward ratio when it makes sense. Or maybe you use a trailing stop loss. Or you just use a very strict stop loss and target and you don't move it at all. The key is to decide before you enter the trade, and every trade should have the same exit strategy. Refine your risk management too. Give yourself daily and weekly loss limit caps. And give yourself this rule. If you took 2 losses in the same day, stop trading so you don't go on tilt. That way, one bad day won't erase an entirely good week. By the end of this month, I want you to complete at least 5 to 10 fully simulated trades using the process. Marking up your levels first, creating a plan, timing your entries with your checklist, and following your exit strategy with discipline. And after you take your trades, review its effectiveness. That's where real growth happens. And look, this is not about hype. I've seen professionals succeed here by just doing the simple stuff really well. One of my students, he's actually a full-time dentist, and he made $75,000 in 3 months under my guidance by shrinking his watch list and only taking trades from his pre-planned zones. By month 6, you should be ready to go live with a small account, and this is where you'll start building consistency. This is the month you finally go live, but I recommend to start small as possible. You should know exactly how much you're risking, dollar-wise and percentage-wise, before you even make your entry. And every week, with the full in-depth analysis of your own trades. Review your win rate, your average loss versus your average win, your rule adherence. And if that data shows that you have a positive expectancy, meaning that you could make profit if you follow the same process, or you will analyze if that data is showing a negative expectancy, where the trades you've taken have caused losses, and there you'll know that there's something you need to tweak. week. From the analysis, pick one thing to tighten up for the next week. Not 10 things, just one at a time. That's how you grow sustainably without burning out. By the time the 6 months are up, you won't just have knowledge. You'll have a system you can actually run day in and day out. And here's the most important part. You'll be calm. You'll be confident. You'll be consistent. Serkan did exactly this. He joined my mentorship in 2023. When I helped him analyze his trading journal, we clearly spotted the leaks in his system. We banned impulse entries, forced him to use the confirmation checklist, and journal every single one of his trades. Every week, by reviewing his journal, he got better and better. By the first month inside of my mentorship program, he had his first profitable month, but he only made $200. However, by the second and third month of consistency, following the process and building discipline, he was averaging $500 to $1,000 per week from a $1,000 account. Serkan was able to have consistency all throughout 2024 that in the beginning of 2025, he decided to sell his business and go full time with trading. Now to this day, he's consistently making $3,000 to $5,000 a month with the 80% win rate and a 1-to-3 risk-reward ratio. It took small steps, but it was steady, and that's how he built his consistency to go full-time with trading. If you're listening to this and thinking that this is the structure that you've been missing, there's a link below in the description to apply for my one-on-one mentorship program so you can implement this process working directly with me. Keep watching though. I'm still gonna give you the full daily workflow, the habits, and the fixes so you can run this process on your own starting today. So let's talk about your daily and weekly workflow. This is gonna be a plug and play. Okay, so you've got the big roadmap, but what does this actually look like in real life? Because the truth is, you don't need to spend 8 hours a day staring at charts. You just need a routine you can actually stick to. Here's the one I give my students and the one I follow myself. Before the opening bell, you'll work for 20 to 40 minutes. This is where most of the real work happens. You'll first mark your levels of interest. You write down your plan, including your bias, your key levels, exactly what would make you enter and what would make you not touch the trade. And then you can even use limit orders to automate you following your trading plan. These are called limit orders, and you can put them in a bracket. So once you enter your trade, you can automatically place your stop loss and your target at the same time to automate your exit. That way, when the market opens, you'll be less emotional and more inclined to actually follow your pre-plan. And then at the open, you'll just focus on the first 60 to 90 minutes. First, allow for the first 15-minute candle to close so you don't jump in the trade too early. Then, if price comes to one of my zones and my checklist lines up, then I fire my execution order. No hesitation, no low quality trades. Take 1 to 3 trades max per day. And if I take 2 losses back to back, I back down trading for the day. These rules alone save people from blowing up their accounts. With my student Lewis, we implemented waiting for the first 15 minutes rule, and he increased his win rate from 22% to over 60%. With my strategy, I'm usually done with trading by 12 p.m. Eastern Standard Time. So after you finish trading, just spend a quick 10 to 15 minutes journaling your trade and tracking the data. Screenshot the trade, write down why you decided to enter, why you decided to exit, how you managed the trade, and if you followed your plan. And then write one tweak or one improvement that you could implement the next day. If you follow that process every day, your trading can completely transform in just a few weeks. On non-trading days, you can keep it light. Spend half an hour reviewing your charts for the upcoming week, analyzing your journal from the previous week, or you can also practice in replay mode. Even on non-trading days, you can build your skill without risking a dime. You've probably heard most traders say that trading is 90% mindset. And that's true, but the problem is most people hear that and they think that that means that they have to read more motivational books or trading psychology books. And then they start chanting affirmations in the mirror. That's not what I'm talking about. Mindset in trading isn't about believing in yourself harder. It's about how you handle yourself in those 5 seconds when money is actually on the line, and not listening to your emotions when they're screaming at you not to follow your plan, or to hesitate to enter, or to chase a trade with FOMO. Don't do the wrong things because you get emotional in the middle of the trade. This is why the pre-plan is so important. So once you're in a trade, you strictly follow that plan you set out. Here's what usually happens. You plan out a trade, you're confident when you enter, and then the second you're in the position, fear starts whispering. Maybe you should cut this early before it flips red. Or greed shows up. Hold it a little longer, just one more candle. Or frustration kicks in after a red trade, and you say, I'll just take one more trade to make it back. Sound familiar? It's not because you're weak, it's because your brain is wired for survival. It's not wired for trading. So how do you fix it? You don't fight emotions head on. You take them out of the equation before they even show up. That means write down your risk and where you're gonna stop out before you even enter, and stick to it. If you know that you're only risking, let's say $100 on that trade, then you could breathe easier and just follow the plan. You don't have to stare at every tick because your account isn't in danger if you're managing your risk correctly. Give yourself a daily and weekly loss limit where you lock yourself out of trading if you reach it. If you hit that limit, you're done. Walk away. It's a built-in break system. Also, you can preset your stop loss and your target before you even enter the trade. That way, when the heat of the moment comes, there's nothing left to decide. The decision was already made for you. And I can't stress this enough. Journaling is where you hold yourself accountable. It's not about writing essays on how you felt. It's literally tracking data. What was the reason why you entered? Did you follow your confirmation checklist? How well did you follow your own rules? Why did you decide to exit? Did you follow your exit strategy, or did emotions kick in? It's tracking data. You might be sitting there thinking, okay, Damaris, this all sounds great, but my situation is different. So let me walk you through the exact roadblocks I see over and over again and exactly how to fix them. I've been living on alerts. Yeah, I hear this one all the time. You're following Discord signals or Telegram groups, thinking, well, if this guy's calling it, it must work. The problem is most of these alerts come out late, or when the trade doesn't play out, you have no idea what to do because you didn't use your own reasoning and you have no process. So it's gonna be that much harder to manage your risk. The fix is simple but powerful. Build your own zones, draw your own levels, and then use a confirmation checklist. So when you enter, it's your decision and it's on you, not on someone else. What I always say is your own analysis is the best analysis because you actually understand it. That's how you build confidence, because now you can explain exactly why you took that trade. And if it was a win, that means that you can repeat it. If you can't stop over trading, that one usually comes from boredom or FOMO. You think if you're not always actively in a trade, you're falling behind. But here's the reality. Most consistent traders I know take fewer trades, not more. So set this rule: 1 watch list of stocks and 1 to 3 trades per day max. And the big one, if you hit 2 losses in the day, you close your platform. No negotiating. You'll be shocked how fast your equity curve flattens and starts to rise once you remove all of these random clicks that aren't actually following a process. If you don't have a big account, I get it. Maybe you're starting with $1,000, maybe a little less, and maybe you're thinking, what's the point to start so small? But literally, let me tell you, I've had students build steady income streams off of accounts that size of $1,000. The secret isn't trading with a large amount of capital. It's trading with quality. Focus on setups that give you at least a 1-to-3 risk to reward ratio. And withdraw your profits regularly so you're protecting your gains. Treat trading like a small business that scales slowly. That discipline pays off way more in the long term than swinging for home run trades or doing lottery trades. If you get anxious with the platform, that's totally normal. I've had students in their 60s and 70s telling me that the buttons alone were making them nervous. The way through it is repetition and practice. Clean up your layout so you're not distracted. Remove all of the noise. Practice pre-planning your trades, and you could use passive limit orders to automate your plan. So your stop loss is already set and your risk is defined, and you know your target is set up to be aiming for at least 3 times as much as you're risking. You could implement a set and forget method like this. Do that enough times and it becomes muscle memory. Your nerves fade because you know exactly where everything is and how much you're risking. Maybe you've tried journaling in the past, but you never stick with it. Listen, I know it's not glamorous, but here's the truth. Your brain will lie to you. Your journal won't, and you'll get a very clear picture. It doesn't have to be complicated. This is the template of the process. Plan, entry, trade management, exit, journal, review. That's it. And then at the end of the week, sit down for 30 minutes and actually review the journal. If you're not reviewing and if you're not analyzing, you're just writing a useless diary. If your entries and exits are always messy, this usually comes down to one thing. You're making decisions on the fly. The fix is to rehearse. You can use on-demand or replay mode to practice your trading strategy. And before you enter, decide exactly what you need to see that will qualify an entry. And decide on how you're gonna manage the trade once it's live. What type of exit strategy are you gonna use? Decide always before entering. That way you're never reacting emotionally. You're just following a plan you already agreed to. And here's the bigger point. None of these struggles make you broken. Every trader faces these. The difference between staying stuck and moving forward is whether or not you actually put these fixes in place. And when you do, that's when trading starts to feel calm. That's when you stop doubting yourself. That's when you finally start stacking consistent green weeks instead of giving it all back. So at this point, you've got the roadmap. You know how to set up your platform, mark real zones, follow a checklist, pick your option contracts based on risk and hold time, set exits that make sense, manage your risk with guardrails, stick to a daily routine, and fix the usual struggles that traders run into. Honestly, you could take this and run with it starting today. The whole reason I filmed this is to make sure you actually have a plan and you're not just following random tips. Now, if you'd rather not go at it alone, that's where my one-on-one mentorship comes in. It's not another pile of videos, it's me in your corner. I will personally check your charts and validate or invalidate for you your supply and demand zones. I'll check your trading plans to make sure you're on the right track. And I'll give you direct feedback, making sure you're consistent until it all becomes second nature. What that looks like is simple. You can DM me questions any day. Chart screenshots, trading plans, whatever you're unsure about. You have that direct access to me to give you feedback. You also get lifetime access to my Options Trading Accelerator video library. That's the core training. I also update this program every single week so you know exactly what I'm implementing in my own trading process and the exact steps I'm using to refine my own edge as well. For 6 months, you'll also get access to join the live small group coaching sessions and my bonus course that is filled with advanced and very practical lessons. Every single day, I also post my own pre-market plan, so you can see me role modeling the exact process that I'm teaching you every single day in real time. And within this one-on-one mentorship, you'll have the opportunity to receive personalized Loom videos from me where I will personally analyze your trading journal and your trades for you each week. I'll help to point out for you exactly which parts of the process you did correctly versus where you didn't do so well. And I'll give you clear improvements that you can implement into the next trades so that every single week you're seeing measurable progress. The only catch is I keep it very small. I can't coach thousands of people at once and still give this same level of attention that I intend to. And lately, these spots have been filling up pretty quickly. So if you want the opportunity to work with me one-on-one directly, now would be your chance. If this feels like the support you've been missing, in the description below, there's a link to apply for my one-on-one mentorship. If there's space, we can get you started. If not, you still have everything in this video to take your first steps. Either way, save this video, print the checklist, and get started. Build confidence in your own analysis. Trade calm and trade consistently. Thank you for watching this YouTube video. I'll see you in the next one.